let's take straight to the rights issue segment, which the newly segment which we have launched, and multiple rights issues are in the offing recently. Companies like AppLab, Franklin Industries are soon coming up with their rights issues. Sharad joins in with more details whether should you participate in the rights issue or no. Sharad, the first things first, why is this segment important? What is the importance of rights issue, and what are the takeaways and the detailed research which you have taken?
Well, Mansi, this is a kind of a regulatory move which we are actually trying to put it out across the audience, and this is the first time it's happening in any channel, that we're actually counting all the rights issues, which are the micro caps as well as the large caps, and actually trying to understand what is the grave concerns coming in, especially when it comes to the retail shareholders. Because a lot of these companies are there, these rights issues which are below the 50 crore mark, and there are some, of course, the disclosure loopholes which small micro cap companies which literally do not have any fundamentals, they come in and they play this round tripping of funds. Now, interestingly, we have done a research on this, and of course, we will be getting our guest Sharan Lane also on this, and there are certain concerns which I'd like to point out. Of course, some of them are weaker fundamental companies, and interestingly, these numbers are below the 50 crore mark of rights issue. And also, I would like the regulators to watch this segment and how impact it can be, and if they can take any actions on these companies. Joining us is Sharan Lane. Sharan, you have done a research on the existing rights issues companies and the rights issues which are expected to open. Of course, we will be critical of this segment, but let's start with the companies which are actually doing a decent work. Their rights issues are open. They might be a large cap company, or they might be a small cap company, but a good fundamentals is there. So, which are the names?
So good afternoon, Sharad, and everyone on the panel, and happy anniversary to all of you all.
Thank you.
So we'll start with Ethos. It's a luxury watch company. It holds distribution. It's an excellent company, fundamentally very strong. Sales have been up from 570 to 1250 crores. Profit is up from 23 to 96 crores. And Sharad, most importantly, it's a tax-paying company. It pays tax every year without fail. FII holds 12.5%, DII holds 17.8%, and the right is coming at a discount of around 1800 crore. So I would definitely suggest please subscribe to this issue. It's an excellent, fundamentally very strong company. And secondly, we'll talk about Ascent Microcell, 528 crore market cap, a decently small company, but it's in a good pharma space. Sales are growing year on year. Operating cash at a cash flow level, it is positive at our operating cash flow levels. And most importantly, Sharad, which I check for every company, does it pay tax or not? And yes, it does pay tax. And over the last 3-4 quarters, institutions are buying stake in the company. Their stake has increased to over 2%, while the retail shareholding has gone down from 45 to 43%. Again, a big positive. So I would suggest subscribe to this company also.
So rights subscription, two companies are there. Ascent Microcell, that's the micro cap company which we are talking about, and of course large cap name we are having luxury retailer Ethos. So subscribe recommendation coming for this. Apart from this, also Sharan, there are certain companies, the small cap companies, where you could see the size is small, but overall there might be fundamentals that's a bit questionable. So which are this list of the stocks which you are tracking in this right space, and what would be your recommendation on this?
So Sharad, I would start with the bottom companies. If you see companies like Bharat Bhushan, they have no business, no P&L. AppLab, negative reserves and basically no sales. Franklin, it was a share trader, it's a textile trader, it's a gold trader, it's an agri-business trader, but doesn't pay any tax, doesn't generate any cash flows. So I will just give you a very small and very fast thing. Parex Home Retail, amount 49.6 crores. Sales have gone from 700 to 120 crores. Loss making, doesn't pay any tax. Rajneesh Wellness, again, amount 48.7 crores. Capital Trust, amount 49.8 crores. Somdat Finance, 49 crores. Sylph, 48.9 crores. Franklin, as we discussed, 48 crores. Satwa Company, 49 crores. Marco Benz Ventures, 48 crores. Yamini Investment, 47.3 crores. Each and every company has zero fundamentals. Basically, some companies have no P&L, and you see the amount, all under 50 crores. And like, it is just made up. It's 48 to 50 crores, all of them. I would suggest please stay away from all these companies and check the share price. Some have a price of 1 rupee, 3 rupees, 7 rupees, 12 rupees. So it's very weird. Please stay away. These companies are all avoid and check the amount of the right issue. It is very strange.
Check some of the numbers. Actually, there is no number. I was checking across the screeners, across the numbers. There isn't any numbers. Sales, there is a zero number. PAT, there is a zero number. And continuously, these companies are coming up with 50 crore, less than 50 crore rights issues. It's a matter of a kind of a humor, basically. But of course, in humor also, we try to find some kind of seriousness. And if I'm talking about that, there are certain companies, of course, they are not zero in their financials, but interestingly, they do have some financial, but of course, there's a question of weak fundamentals as well. So, which are these companies in the right space, and what would be your call?
So I'll start with Himalaya Foods. They say they are into the mushroom business. Sharad, if you see their sales, it has gone down from 120 crores to 40 crores. They had just 1 year of profit, and that too because of some other income. Again, the company doesn't pay any tax. Basically, the promoter is reducing stake from 50%, has gone down to 46%. I would say strictly avoid this company also on back of fundamentals. Secondly, there is Ugo Capital. Their right issue is coming at 162 rupees. Sharad, the share price is 165 rupees currently. Why would you subscribe to the right issue? Why would you get your money stuck when you can buy the stock at the current market price? So that doesn't, I don't get this. And even if you see their past dilutions and all that, I don't see any fundamental upside to this company also. You can avoid this company. The last company is a metal company, Univision Metals. Again, Sharad, the big red flag, no institutional holding. Promoter holds 51%, the retail holds 49%. And if you see the asset on book, Sharad, 28 crores in 2021, 30 crores today. So there's no expansion. Their liabilities have shot up like anything. If they're up 86%, debt is high, around over 2%. Again, very high stretch working capital, receivable inventory, everything is up. Again, no capex plans in the last 5 years. So again, you can avoid this company also.
That's our special on rights issue, where we give all the important rationale behind understanding rights issue of shares, risk of purchasing shares via rights issue, how do companies benefit from a right issue, and impact of rights issue on existing share value. Thank you so much, Sharan and Sharad, for giving all these details. On that note, it's a wrap on this edition of Buy Now, Sell Now Markets Radar. It's a goodbye from me and Kanishka, but you stay tuned with ET Now.
If you like this video, then like, share and subscribe to ET Now.